Airbus and Boeing have been competing head-to-head for decades as the world's largest commercial airplane makers. But over the last few years, Airbus has edged out Boeing for market dominance.
One tweet: a new round of tariffs, a grounded airplane sitting idle at a factory, and a trillion-dollar market slowly shifting without making a sound. While former President Donald Trump intensifies his trade war with China, calling them tech thieves and job stealers, somewhere far from the press briefings, Boeing, America's aviation titan, is watching its future quietly slip away. What's worse? Its rival, Airbus, doesn't need to say a word. All it has to do is wait and deliver.
We're going to end up with a baseline of a substantial number, which we never got anything. The United States never got anything until I came along, and then I put very substantial tariffs on China.
In late April 2025, after the Trump administration imposed tariffs of up to 145% on high-tech Chinese goods, Beijing retaliated by ordering domestic airlines to halt deliveries of new Boeing aircraft, particularly the 737 MAX, leaving dozens of jets stranded in the U.S.
Yeah, there's generally big appetite from China for aircraft, both Boeing and Airbus. But the problem is that right now, China is not buying Boeing aircraft because of the political spat that's going on between Washington and Beijing.
The result? Nearly 50 Boeing 737 MAX jets were rejected by Chinese buyers and now sit idle in U.S. warehouses. These aren't grounded because of technical failures. They're grounded by politics. Meanwhile, Airbus, with a final assembly line in Tianjin, continued delivering jets as usual. Chinese carriers are now reportedly preparing to order up to 500 Airbus aircraft, according to The Times and Business Insider, a massive blow to Boeing and a clear signal to Washington. If trade becomes a weapon, buyers will find a safer supplier. In June 2025, Airbus overtook Boeing in aircraft deliveries for the first half of the year, 243 jets versus Boeing's 220th. But numbers only tell part of the story. Airbus also secured over 500 new orders, many from Asian carriers that were once loyal to Boeing. The reason? Not cheaper prices, but reliability amid chaos.
And we also know that China has essentially stopped taking deliveries of Boeing aircraft. So while they have planes on order right now, that entire business for Boeing is on ice.
Boeing isn't just losing sales. Its stock has plunged 9% this year amid fears of unsold aircraft, weak cash flow, and long-term market erosion. Executives are now considering redirecting undelivered 737s to African and South American airlines, a move that just a few years ago would have been unthinkable. At the same time, Airbus launched its new A321XLR, a single-aisle aircraft with 11-hour range and lower operating costs. It's already being dubbed a game-changer by carriers like American and Indigo. Boeing? It currently has no direct competitor in that category.
It's hard to see anything that stops Airbus from controlling that all-important mid-market segment. We're really talking about a battle for the 2030s here. The 2020s have been decided.
Trump's strategy to make America great again by tightening tariffs and punishing China may work in some industries, but in global aviation, where cross-border cooperation is everything, it's backfiring. Boeing isn't just losing revenue, it's losing credibility, global reach, and the trust of airline partners. Aircraft that once symbolized American engineering now symbolize a casualty in a geopolitical grudge match. And Airbus? It's not winning through flashy PR, it's winning through consistency, neutrality, and simply not getting dragged into a trade war. If this trend continues, we may look back in a few years and realize the Trump-China conflict didn't just reshape global trade, it redrew the map of commercial aviation.
We are ready for a deal. At the same time, we are preparing for the possibility that no satisfactory agreement is reached. This is why we consulted on a rebalancing list, and we will defend the European interest as needed. In short, all options remain on the table.
The clock is ticking. As July 9th approaches, the European Union is no longer negotiating in silence. Behind closed doors in Brussels, European leaders are finalizing their response. Because if there's no trade deal with the United States by the deadline, retaliation is no longer just an option, it's a plan. At the center of it all is Donald Trump. Once again, he's driving the story, issuing threats, pushing tariffs, and betting that the EU will blink first. But this time, Europe may be ready to call his bluff.
Now, a week and a half away from that deadline, July the 9th, where the United States would impose 50% tariffs on the European Union. That is, it's really important that they get a deal right here, and it's one that is relatively balanced.
Back in April, Trump reignited his trade war strategy with a sweeping policy he called liberation tariffs, a 10% baseline tax on all imports, and up to 50% on specific countries or sectors. The European Union was put directly in the crosshairs. The message from Washington was clear: agree to a new deal, or face a 50% tariff wall on everything from steel and aluminum to auto parts and chemicals. Trump gave Europe until July 9th to accept the terms or suffer the consequences. This was not a negotiation, it was a deadline wrapped in pressure. Trump believed the EU, fragmented, cautious, and export-dependent, would fold quickly. But what followed was something else entirely. In Paris, the tone has shifted. President Emmanuel Macron, standing before the European Council, confirmed what many suspected. Europe is preparing to strike back. Behind the scenes, the European Commission has already drawn up a rebalancing list. It includes tariffs on iconic U.S. exports, aerospace tech, and agriculture. According to Macron, European industries have already absorbed an estimated 60 billion euros in extra duties over the past year under Trump's trade policies. And while countries like Germany and Italy have signaled they might accept a 10% deal to avoid escalation, France has made it clear: any long-term imbalance will be met with equal force. Europe isn't rushing to retaliate, but it's also not stepping back. The game has changed. What was once diplomacy is now defense. Meanwhile, financial markets are oddly calm. According to analysis by BNP Paribas, when Trump first floated the 50% tariff in May, Euro stocks dropped about 3% intraday, closing the day down 1.8%. But in recent weeks, volatility indicators across European indexes have remained flat. There's no pricing in of risk, no visible panic. Experts believe it's due to fatigue. Investors have heard this story before: threats, bluster, then last-minute deals. But this time, complacency may be dangerous. If the US imposes full tariffs and the EU responds, markets could snap violently. The Boeing-Airbus rivalry could become a trade war, and sectors from pharmaceuticals to automotives could be caught in the crossfire. Trump continues to promote his trade record as a personal victory tour. He's told crowds that every country wants a deal, and that tariffs are just leverage to secure better terms. In recent weeks, he's claimed new victories with China and the UK, but the fine print tells a different story. The China deal still holds a 55% US tariff on imports. The UK agreement skipped over critical sectors like steel. Talks with Canada remain unresolved. And now, Europe is pushing back harder than anyone expected.
For us yesterday, Ollie, some EU leaders then pushing for a quick solution.
Still don't have the sectoral tariffs. And always the perennial concern with the Trump administration is that they may get something and then come back for more.
July 9th is not just a deadline, it's a test of power. Trump built his presidency on the idea that pressure produces results. But with the EU now openly preparing retaliation, the pressure may finally swing back. The world is watching. Because if Europe follows through, if the retaliation hits, this won't just be another trade fight. It'll be the moment when even allies stop playing by Trump's rules.
First call from them: we want to open up China. And if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
As of today, June 10th, US-China trade talks are still underway in London. And one issue remains front and center: rare earths. These critical minerals power smartphones, electric vehicles, and advanced manufacturing. And they've now become a core sticking point in President Trump's economic strategy. With the July 9th tariff truce set to expire soon, the question is, can Trump's team unlock this key resource, or will China's grip hold? Let's take a closer look.
In Geneva, we had agreed to lower tariffs on them, and they had agreed to release the magnets and rare earths that we need throughout the economy. And they were kind of releasing them, but it was going a lot slower than some companies believed was optimal.
Rare earth elements aren't rare in abundance, but they're difficult to refine. And China currently controls nearly the entire global supply chain. They're critical to U.S. tech, defense, and clean energy sectors, from smartphones to EVs and wind turbines. Trump's top economic advisor, Kevin Hassett, said on Face the Nation that the U.S. wants rare earths and magnets to flow just as they did before the beginning of April. But since April, exports from China have slowed dramatically, squeezing U.S. manufacturers. Industries feeling the impact range from automakers to wind turbine producers to aerospace suppliers. Small businesses are also under strain. CBS News reports that many firms are delaying new orders, scaling back hiring, or postponing capital investment. In short, this isn't just about geopolitics, it's about the stability of key U.S. industries and jobs.
China is actually quite strong. They've discovered this rare earth card they can play that makes us desperate.
China knows it has leverage. As Trump said earlier this week, we want to open up China. But China is not easy. And Michael Pillsbury, a former Trump advisor, added, China discovered this rare earth card they can play that makes us desperate. Trade data backs this up. According to Fox Business, China's exports to the U.S. dropped 34.4% in May year over year, yet rare earth restrictions remain in place. Trump's previous tariffs have pressured China, but as Pillsbury notes, they seem very relaxed as long as tariffs stay under 70%. So despite pain on both sides, Beijing is holding firm, and Trump's team hasn't yet secured a breakthrough. Trump's strategy now leans on export controls. The Commerce Department, under Trump's direction, recently blocked U.S. firms from sending advanced chip design software to China, critical for China's AI ambitions. At the same time, Trump has pushed for rebuilding rare earth supply chains at home, including projects in Alaska, California, and Texas. But as Brookings' Michael O'Hanlon points out, these efforts will take years. Former commerce official Nazak Nikakhtar also notes that recycling magnets offers some short-term relief, but it won't replace China's grip anytime soon. So, while Trump is trying to reduce dependence, the U.S. remains exposed for now. As of June 10th, the London talks continue with no official breakthrough. Trump has sent 3 of his top trade envoys, Howard Lutnick, Scott Bessent, and Jameson Greer, to lead negotiations. The goal? Push China to ease rare earth restrictions in exchange for possible concessions on export rules. Kevin Hassett confirmed that China had agreed to release rare earths under the Geneva Truce. But it was going a lot slower than some companies believed was optimal. With the July 9th deadline fast approaching, CBS News reports that an extension is on the table, but no firm agreement yet. Meanwhile, U.S. businesses, especially small firms, are pausing investment and hiring until the outcome is clearer. So as the London talks continue today, rare earths remain the central flashpoint, and Trump's economic team is under pressure to deliver results. For now, China holds the stronger hand. Whether Trump can shift that balance in time remains to be seen. We'll keep tracking every move. Stay tuned.